All right. So we ready to go?
We're ready to go, Ken.
All right.
Poor Danny's a bit hungover.
Very hungry.
Uh-oh. So you went out afterwards.
We went out after. We went to the Giga,
good.
party, then somewhere else. I made terrible decisions.
All right.
He's not crying.
No. You have a smile on your face.
His eyes.
I know.
Do you know what that is on Caitlin's top?
I assume it's something to do with Wyoming.
Yeah.
What is it?
Well, it's the tattoo. Oh, we had a bet.
I know we did have a
What
bet.
was it?
To get a tattoo.
It was Bitcoin had to hit 35K by when?
I think it was by the conference in Miami.
But it didn't. And so I don't have the tattoo, but damn it, I still am thinking about getting that tattoo.
We should just go get that tattoo.
Senator Lummis has this on her leg, and I asked her why she put it where she did, because it's not like on her inside ankle, it's on her shin. And she said she had a little scar there, but she's got it. And I'm like, well, maybe I should just do this because I'm not tatted, guys.
Let's do it. I'll go with you. We'll both get the Wyoming horse. Well, when can we do it? I'm trying to think.
Next time we're going to be in the same physical place, which doesn't happen very often.
Nashville next year.
Nashville, yeah, I'm set for that.
Unless you're coming to Bedford in April.
Your conference, I know. You know what? I have no idea what my schedule looks like in 2024. I have not booked out that far.
I have a guy who can get us tattooed in Bedford. Okay. It would feel apt for us to get a Wyoming tattoo in Bedford.
All right, let me think about it. I've been thinking about it. I did almost have you snowed over that one time when you came to visit, and I showed up with the tattoo, but it was a sticker.
It was you cheated me.
I was trying it out.
Yeah. You got to get it done. Right. Anyway, how you been, Ken?
Oh my gosh, really on fire. It's the year started out kind of a bummer, and we took the hit and kept on going.
Got to keep going, right? Yeah. Can you bring up that James Lafish tweet? So about
you got to remind me which one it is.
It's the one where
there it is.
Yeah, that one. The remember. Okay, so we did an interview. You, me, and Saifedean. The podcast was about 6 months old.
Yeah.
It was you, me, and Saifedean. And back then I didn't really understand much of what you told me. I understand a bit more these days. But you told me they're running out of bullets.
Yeah.
Yeah. And I think this is what you were telling me, basically.
Well, back then, interest rates were at zero. And so they would have had to have gone to negative interest rates, which would have, I think, if you do that, I mean, it really does probably spell the end of the reserve currency with negative interest rates. That was where I was going. So what ended up happening, of course, all the central banks in the reaction to COVID printed just staggering amounts of money, and they actually figured out how they could generate inflation by printing staggering amounts of money. That's what happened. So now they actually reloaded. Mm-hmm. So I'm actually less worried right now,
so
ironically. They've got more bullets, right? Because the next time there is something in the financial system that truly breaks, they can cut rates again. And so we were at a dinner last night, all together, all three of us, and talking about where that is likely to happen. And I'm not making forecasts, but it's absolutely the case that the financial system is fundamentally unstable. A lot of people woke up to that in March this year when you started to see bank runs happening, and you realize, maybe the banking system is not as stable as they're saying. Well, guess what? It never was. And so it's just that it becomes obvious in people's consciousness when you see banks failing. But that contagion they were able to stop, and it was again because of the Fed putting the program in place where banks that had long-term U.S. Treasuries that were trading at 70 cents on the dollar, they can take it to the Fed window and get 100 cents on the dollar loans to just bridge until those long-term Treasuries that they bought in the rising interest rate environment lost a lot of value. That's just the bond math, time value of money. It's not that the U.S. government is going to default. I do believe the U.S. will pay off all of its treasuries. The question is, will the dollars that they use to pay them off be worth anything when they do, right? But the point is that I think the U.S. will actually pay off those treasuries, and the Fed essentially just created a process where banks that have underwater U.S. treasuries can take them for 100 cents on the dollar, even if they're trading at 70 cents on the dollar in the market, right? That's effectively QE. It was a bailout for those banks that made that terrible decision. But you and I were talking on stage yesterday. What created that terrible decision? It's the bullwhip effect. It was during COVID that they printed so much money. And the way that mechanically, when you print money, it works is the cash gets injected into the banking system. No one during COVID had any confidence in the private sector. So they were buying treasuries instead of making loans to private businesses. And there were zero yields on short-term treasuries. So what did the banks do? They bought 10-year treasuries and 30-year treasuries. And then when the Fed started to take that money back, the staggering amounts of QE during COVID, it turns out that we've seen a big correction in the value of those long-term bonds. Like I said, some of them trading at 70 cents on the dollar. And if everybody wants their money back from the bank at the same time, guess what? The bank hits the wall, right? But the Fed was able to stop that contagion, at least temporarily, by creating the new program in March.
So did these banks essentially get rugged by the government in that they bought treasuries, long-term treasuries, under the belief that they would have a certain amount of value? Or is that the risk of bond trading?
So I don't believe that they got rugged. I think I've seen a lot of people say that that's what happened and it's the Fed's fault. No, it's the bank management's fault. Not all banks made that same decision. Many of them did, but they were taking on enormous amounts of interest rate risk, and they really knew it. And so when Silicon Valley Bank's management doubled down and took demand deposits for some of the hottest of hot money customers, which is tech companies, and thank you, and put and invested in long-term treasuries. I mean, they should have known that there was a risk, and I guarantee they did know. They just decided to just do it.
Well, let's see how much I've learned here in my time, because sometimes we have these conversations over and over again with people, and it doesn't always land. But as my understanding is when they bought the treasuries themselves are fundamentally fine if you don't have to sell them. If you can carry them to duration.
It's the U.S. government IOU. Yeah.
So if you can carry to duration,
correct,
you're absolutely fine. But the problem is when the run went on the bank, that you have this duration mismatch.
Correct.
And so they had to sell them. And if you're fire selling them, they're underwater.
Right, at 70 cents on the dollar.
Because if you want, there's newer treasuries available with better rates.
Correct.
That's essentially what happened.
That's exactly what happened.
Right. Yeah. Okay. So that says to me that's a fundamentally risky business model because essentially they can be a profitable business but go under due to this duration mismatch.
Correct. Yeah, it is. The banking business is a confidence game. And traditional banking, where banks take in depositors' money, everyone thinks it's your money, and you can get it back whenever you want. But what they've done is turned around and made mortgage loans or student loans or car loans with it with some duration. And so it's fundamentally a confidence game because it's based on the assumption that not everyone will come and get their demand deposits back at the same time. But when there is a bank run and everyone wants their demand deposits back at the same time, that's when the insolvency of the bank is revealed. And like I said in the beginning, it was there all along. It's just that people didn't think about it. And I think what's interesting about the Silicon Valley Bank situation is that it had predominantly Silicon Valley tech companies as customers. Nobody in the treasuries of those startups or CFOs of those startups was doing counterparty credit risk analysis, because if they had been, they would have been all over this. You know who didn't have problems? Large corporates, because large corporates have treasury departments whose staff does counterparty credit risk on their banks because they understand. And the FDIC is only insuring up to $250,000. Think about Apple. Apple has how many hundreds of billions of cash? Okay, that is all uninsured because it's only insured up to $250,000 even for Apple, right? So they have to actually do the real work, and they're all monitoring their banks. But who wasn't monitoring their bank? Obviously, were the Silicon Valley tech companies, and all it took was an email from Peter Thiel to spark that bank run.
What? I mean, if I was Apple, if I had 250 billion, I'd probably be going straight to the Fed. Can we just have an account with you?
Well, you know what's funny is in the 2008 financial crisis, when I was working with corporate treasurers, I actually looked at that because Siemens in Germany got an account with the central bank in Europe, and it was not out of the realm of reasonableness that these companies that had big corporate treasuries would want to just get their own account at the central bank, the U.S. has a policy of separating commerce and banking. And there are good reasons for that. But long story short, there isn't any U.S. corporate that can get an account at the central bank. This came up when Facebook tried to do Libra, because the Fed really wanted a separation of banking and commerce. And the FT had a really interesting article that talked about how, they got all the way up to the top of the Fed, and it was the general counsel of the Fed who communicated very dryly from apparently reading a script. This was all described in the FT, that the Fed stands for separation of banking and commerce, and Facebook is not allowed to be a bank.
When the big corporates do the counterparty credit risk, how do they actually assess that? Are they not all functionally the same, and therefore, if there's a bank run, functionally insolvent?
Well, no. In the U.S., one of the things that non-Americans find weird about the U.S. banking system, among many things, but one of them is that there are so many banks in the U.S. There are 4,236 banks.
What do we have in the UK? About 10? 12?
Something like that. Well, you do have the building societies, and we do too, though. We have the credit unions and savings associations and the like as well. But actual real banks is a huge number. And so we have a lot of small banks in the U.S., and they're basically talked about in three different categories. Community banks, which is the proverbial, one or two branch banks usually, and then the regional banks, which have, sort of $100 billion in assets, and then they used to call them the money center banks. Now they're called global systemically important banks. These are the global banks, the money center banks that do business all over the world and get involved in foreign exchange. They're also, all of them now, involved in investment banking and trading and derivatives and the like. So you can see there's a big differentiation between those three different groups of banks. So the big banks were, they're subject to higher capital requirements, and they have to hedge their interest rate risk. This is the biggest reason why the community banks and regional banks screwed up and the big banks did not, which is driving more deposits into the big banks. The big banks had hedged their interest rate risk. The community banks and regional banks didn't have to, so they didn't, and now they're in trouble. And you can see it in the stock prices.
Was there ever a time where bonds were used for a valid need at a time, and then they would all go to mature and be paid off, and the government would be square and everything would be okay? Because I feel like we're at a time now where bonds are almost like me paying off a credit card with a new credit card, and then get another credit card to pay off another credit card. Sure. And it feels like we're now in a world where you can see these sovereign currencies are Ponzi's.
Of course they are, and but they always have been.
There was never a time when they'll run a surplus and pay it off.
Okay, yes, there was. So during my lifetime and your lifetime, Bill Clinton paid down debt. He actually shrunk the size of government. During my lifetime, he's the only U.S. president who has done that. And by the way, I think that's why, in my personal opinion, there have been two decent presidents in the United States in my lifetime, and he's one of them for that reason. In spite of all of the controversy, he shrunk the size of government and paid down debt. We had a surplus. We were running a surplus for several years. And it actually, ironically, created problems in the financial markets because the U.S. Treasury wasn't issuing treasuries. And in the financial markets, you're piling debt on top of treasuries, right? And if you don't have enough treasuries, then you can't create all that credit inside the securities industry. So that during our lifetime, we've actually had someone. Now, he didn't pay down all the debt. He just paid down some of it because U.S. was running a surplus for several years during his presidency. But during my lifetime, and I'm 54 years old, there's been one president that actually paid down debt. But if you go back deeper in U.S. history, there were several who did. And there was the Great Depression of 1920 that nobody talks about, because the Great Depression that everybody reads the heartbreaking history of came after that. But in 1920, after World War I, everybody was absorbing the war, right? Britain went off the gold standard. And then after the war, it went back on the gold standard at the original pre-war price. However, there had been so much debt that had been piled on top of the British economy that when they went back to the pre-war gold price, it was deflationary, right? So there was a depression, and that reverberated all around the world, even though the world was not as interconnected back then. But nobody talks about the depression of 1920. Why? Because it lasted 9 months. It was as deep as the Great Depression in terms of both unemployment and GDP correction, but it happened fast. And why did it happen fast? Why didn't it just drag on and on and on like the Great Depression did? Because the central banks weren't trying to fight it. They were actually, the president back then actually paid down debt instead of trying to figure out how to, let's, do QE, let's expand the size of the central bank, let's try to keep interest rates low. There was no manipulation of the free market whatsoever. And the US government paid down its war debt during that period of time, and it was over fast. It was brutal, but it was over fast.
Don't avoid pain. Just allow markets to act like markets.
Well, but right now, everyone just takes for granted. They think the US has a free market, but of course we don't. The most important price in any economy is the price of borrowing money, because that's the traffic signal for capital allocators to allocate capital across time, as in short-term versus long-term, or across industries. And the most important price is the most manipulated price.
Well, what is a good price of capital? Because we know 0% interest rates are a bad signal.
Makes
They
no
distort,
sense.
distort markets. But also, we know if it was 20%, people wouldn't be able to afford to borrow to build businesses. Is it like an ideal?
I don't know what that is, and I don't pretend to have the knowledge. This is the Hayekian pretense of knowledge. Nobody knows what the real price of interest would be. And if we let currencies freely trade and let interest rates freely trade, and the central banks do what they did in 1920, just step back and stop manipulating, then we'll find out what it is. But one thing we do know is that time preference really does matter. A human being, all else equal, would rather have something today than tomorrow, right? So it takes discipline to save and put off your consumption to tomorrow. So we would rather have consumption today if given a choice. So what does that mean? It means by definition, there is a value to time. And it means, therefore, there is a time value of money. And therefore, that means interest rates will always be positive. And the yield curve will be unmanipulated yield curve would naturally be upward sloping. And you would never have negative interest rates.
This is the pleasure trap. Somebody wrote to me once, and they said, you need to read a book called The Pleasure Trap. Because I've always tried to lose weight and I never do. And it's all about decision making. And, it's that short, it's a time preference thing.
Absolutely.
It's exactly the same. Everything you really want in life takes discipline.
You're right.
Because you have to put time into it, like a good physique, looking good, saving money, all these things. But we've constructed a society that gives us instant pleasure at the touch of a button, whatever we want. Coffee?
Right.
If this was 20 years ago, my mum would be up there making a coffee. No, Starbucks, someone will deliver it to us.
Yeah, you had it delivered. All of a sudden, Danny brought me a second coffee.
We'll pay $25 for 3 coffees rather than just make. But this is the pleasure trap. It's interesting because over the length of doing this podcast, you get these realizations, these things that come to me at certain times, and I had one recently where I was talking to Steve McClurg about this, who we were at dinner with last night. Was that when I was younger, when I was in my 20s and 30s and had no kind of concept of time, I was always thinking about how I make money, how I build wealth.
Right.
What could I do? What businesses could I set up? What jobs could I do? Over the last couple of years, and I think this is a combination of age and doing this job, I now think a lot more about wealth preservation.
Yes, sure. Because you have something to preserve.
Yes. Yeah. And I have dependents to look after.
Right.
And so I think about that a lot now. And what's come off the back of that is this kind of separate realization of this separation of money and state. Yes, I've always been as a Bitcoiner, I believe it, but I've actually come to that like a strong realization, because I met somebody in Colombia who was a Venezuelan who'd lost everything through inflation.
Oh my gosh, yes.
And I was out in Lebanon, and I met and Argentina, all these places I've been, I've met so many people who had everything they worked for their entire life wiped out. And honestly, if that happened to me, Caitlin, I'd be devastated.
Of course you would.
Because the devastation would be for what it can do for my family, but also is all that expended energy over this last 2.5 decades when I've worked would have been for nothing.
Correct.
And so I think about that a lot now. And because of that, one, I obviously have tactics and tools I use, but I also have this massive disdain for the people who have no respect for the hard work of others, the idiots within government, within central banks, who just make policy decisions without thinking about the dire impact that this has on millions and millions of people.
Correct. Right. Yeah, absolutely. That's why I would never want to be in that position. I just did an interview with Max Raskin, and his interviews are always quirky, and he just throws crazy questions at you that, you've never been asked in an interview. And we were talking about exactly this. He was trying to push me for why I'm not getting involved in politics and why wouldn't you want to be in a, government position. And it's exactly that reason. I don't want to tell people what to do with their money, and I don't want to be in a position I don't believe, let's put it this way, I don't believe the financial system is stable, and I wouldn't want it to collapse on my watch. So why would somebody who has espoused solvency and strong capital structures for her entire 15-year career post the financial crisis, who has dedicated herself to finding a better, more stable financial system, walk in to an unstable system and take responsibility for it? It makes zero sense. And so a lot of people will say that on Twitter, like, well, why aren't you, in a position of power? And I absolutely don't want it. Thank you. And so but it's funny, we were just chatting before we started, right? There are two presidential candidates, both of whom you interviewed yesterday, right? Who are here at the North American Blockchain Conference, and they're both hardcore Bitcoiners. And they get it. They get the philosophy behind it. They also get the utility behind it of faster payments and faster settlement, a more stable financial system. They totally get it. And they're both really curious people, and I've met them both, and they are, I will say, both of them have very special minds. It's not an accident that some of the smartest people ended up early Bitcoiners. And it's because a lot of us figured a lot of this out. And I don't put myself in that category. I certainly, the most important people in this space are, well, you too. The most important people in this space are the software developers, and I am not that. I'm just trying to open the door to allow their great creation to be adopted by more people, because we knew that the regulatory state was going to be an attack vector on it. And so I'm trying to get that door open, and it's taken longer than I expected. But I was having a chat with Trace Mayer not too long ago.
Oh, how is Trace?
He's great. He's doing great. And he said, it's going about as fast as I expected it to. Remember, his sixth network effect was financialization, and the seventh network effect is global reserve currency. We're at number 6 on his network effect, and he's like, it's going about as fast as I expected. So it's nice to hear his perspective on that.
His name comes up regularly, and he's desperately missed.
He is. He really is. But he's doing well. He hasn't moved on from Bitcoin. He's just gone out of the public,
the limelight
eye. Yeah.
Well, I understand why people say, Caitlin, why aren't you going into politics? Because they know you'd be brilliant at it. They know your perspectives, but you kind of have anyway in the other way. You can do it the other way. You can be on the sinking ship and try and change it, or you can build the life rafts for people. And that's what you're doing with Custodia, which we'll certainly get into. But yeah, so this whole realization of this whole financial system, it's been a real challenge, because it starts to make you question, well, what should I be doing with my time? Like you've been doing. What should I be telling? How do I teach people? And I've become very despondent with politics.
Of course.
Very despondent with politics. And so thinking, should I be making a Bitcoin podcast, or should I be making a podcast that opens the eyes of people in the UK about all of this nonsense? Yeah. Because what I'm worried about right now, Lynn, I was thinking of a Lynn Alden. What I'm worried about right now, Caitlin,
I love
is that we've just gone through a period of high inflation.
Yes.
And it's been troubling for people in the UK.
$25 for 3 coffees. Yeah.
Well, it's the jump in people's mortgages.
Yep.
I mean, I know specifically one friend was talking to me about the jump in the various costs has taken their disposable income down to negative, just over a very short period.
Of course.
And what's going to happen is we're in this period now where recessionary pressures are hitting.
Yeah.
So there may be a desire to reduce interest rates. Okay. But at the same time, there is so much debt that the government has that we know they're going to have to print. Well, we're told they might have to print.
Yeah.
So they've got these two opposing forces. And if in the great financial crisis, you're going to correct me on this, but whether it's debt or printing, whatever the cost was to get out of the great financial crisis in 2008, it was less than $1 trillion. We understand. This year, there's trillions of new debt. What happens in the next one? Do they have to go to Congress and they need 10 trillion or 15 trillion?
So here's the interesting thing. When I did my big study of different schools of economic thought after the 2008 financial crisis, I looked at the entire range. Okay, and the modern monetary theory, that it was starting to become vogue in the academic circles back then. It's being implemented now, but back then it was relatively a niche thing. And it's the polar opposite of the Austrian school. Modern monetary theory says debt and deficits don't matter. I'm oversimplifying, but Austrian school says capital structure is the only thing that matters. Okay, so they're the polar opposite. And it wasn't until I got into the Austrian school that light bulbs started going off. I don't think they're perfect. And a lot of folks who would be listening to this podcast who have an economics background are laughing. The Austrian school, that's been, completely eradicated and has no credibility because they keep screaming hyperinflation and it never happens. Okay, but what's more interesting to me is why, if I think they're fundamentally right, which they are, which is that the capital structure really matters, and there will come a point at which it's the only thing that matters. Why have they missed it so badly in their application of that theory by continually calling for a collapse of fiat currencies, and it continually doesn't happen? That's the more interesting question.
But does it need it? So if you're calling for hyperinflation, well, firstly, hyperinflation has happened. It just hasn't happened in
in developed countries yet.
Yeah, I think the most developed country with close hyperinflation would be Turkey. What's the number that is it over 50%?
I don't even know what they consider hyperinflation, but
they had 97%, I think, anyway. I mean, that's catastrophic inflation.
It is catastrophic. Yeah.
And we know we don't have to repeat all the countries that have had hyperinflation these last couple of decades, but it has happened.
Sure.
But so when you said to me there's this school of thought, the MMT's thought that says debt and what is it? Debt and
deficits.
Yes, it doesn't matter.
Yeah.
I think that is a small group of people saying that doesn't matter for a country. And I think the Austrians, their school of thought thinks of the individual. Yeah, it thinks of you as the individual. Capital structure.
That's definitely true.
Yeah. These people can make a decision for a collective, and the Austrians are making a decision for the individual. So I prefer the Austrians because I prefer to be the master of my own destiny.
Correct.
Right? But I do have some sympathy for at times of crisis that if a country is in crisis, there is an opportunity to issue debt and protect everyone.
Well, that's what Keynes originally had said.
Yes.
I think Keynes would not be happy about the bastardization of Keynesianism because it was supposed to be counter-cyclical. You weren't supposed to be stimulating with fiscal policy during boom times. It was only during the bust that you were supposed to stimulate, right?
But you can rob more during that period.
But that's the point, right? And so what happened is the economists became sort of the courtesans that the politicians would keep around them to justify the incredible deficit spending that they wanted to have. There is zero discipline in Congress. I laugh at the new Speaker of the House in the United States trying to get some control over this because most of the Republicans are big deficit spenders too. There is a so-called uniparty in Washington, D.C. that they've all bought into this notion that deficits don't matter. I mean, that phrase was a phrase coined by Dick Cheney. So this is not a liberal versus conservative thing. Hell, look at the debt numbers and tell me when you had a Democrat as president of the United States and when you had a Republican. Okay, the only time the debt dipped was when a Democrat was president of the United States. We just talked about this, right? So the Republicans are not actually walking the talk, so to speak.
I don't think the lack of hyperinflation invalidates their theory. What I care about is what is the overall impact in society. I think you can have a fracture in society without hyperinflation. You can have a widening wealth gap, which we definitely have a widening wealth gap.
Yeah, of course. And it's tragic.
I don't want hyperinflation to be the signal that says, oh, we were proved right. Let's just look at what's happening in the world. What is the size? Probably the better measure would be the size of the middle class. If the middle class is shrinking, then MMT...
Then the country's failing.
Yeah, the country's failing. Yeah. And middle classes are shrinking.
Yeah, because MMT is manipulating. It is creating a subtle way where wealth is being drained from the middle class to the upper classes and to the poorer classes. And it's doing it subtly. And a lot of people, they can't put their finger on exactly what's happening. I know the plumbing of how it's happening, but it's absolutely true that the rich are getting richer, the poor are doing relatively better, but the middle class is the one that's having their wealth drained. Absolutely. But to get back to your question of and this is the James Lavish tweet, will we end up with a debt tsunami? Of course we will. So he and I are not disagreeing about that. But one of the interesting things, and this is why one of the things the Austrians missed, is by the Fed printing money, it doesn't mean that is immediately inflationary as I define inflation here, to mean that it's going to cause a collapse of the currency immediately. Here's what's happening. The private financial sector created a lot of debt that is defaulting, and the public financial sector, i.e. the central bank, is just backfilling the bathtub. Okay, so when a default happens, that's deflationary. That money got destroyed. So what's happening is private money is getting destroyed and it's getting replaced with public money from the central bank's balance sheet. So if you look at private non-financial sector debt, it's been a while since I've looked at the Fed's Z1, but it's something around 95 trillion. Okay, so I don't even know what the Fed's balance sheet is. I haven't paid that much attention to it, but long story short, it's not even close to 95 trillion. So literally, if the entire private sector debt were to default and the public sector debt was going to replace it, i.e. the Fed was going to expand its balance sheet to replace it just to keep the total amount of credit in the economy flat, the Fed could have a $95 trillion balance sheet. And we're not there yet, okay? But see, this is why why I phrased it as one of the most interesting questions is why hasn't the dollar collapsed yet? Because the Austrians will scream, and they did at the time, the moment that the U.S. went off the gold standard, dollar collapsed, and it hasn't happened. Why? Because we were bequeathed a tremendous balance sheet by our ancestors. And we had an equity-financed economy up until 1968 in the United States. And frankly, most of the rest of the world, because most of the rest of the world follows the dollar and follows the U.S. standard, whether explicitly or implicitly. And so, it used to be that your grandfather gifted you a Series EE savings bond in the 1950s. Now your grandparents are co-signing on your credit card. Okay, so we went from, when you come of age, we went from from being gifted assets to being gifted debt. And that's what's happening. And it's just now part of everybody's capital structure. But the erosion of real wealth that is coming from that is staggering. But it's been subtle and it's been happening over 50 years. Literally, I was born in 1969 and the US flipped from an equity-based economy to a debt-financed economy in 1968. So my entire life has been during where we've been eating the seed corn, so to speak. We've been drawing down the equity of the United States. But that's why those who called for a collapse of the dollar when the U.S. went off the gold standard in 1971 were wrong, because we actually had a lot of equity capital that we could just draw down. And we've been drawing it down by borrowing. And we will hit an insolvency in the U.S. at some point. So James is right. There is going to be a debt tsunami that is going to hit the insolvency at some point. But I think we're nowhere near as the naysayers think we are. Now, that said, it could happen tomorrow because the financial system is that unstable.
Wow.
And so, we could have another 2008 and have a systemic issue that requires, tens of trillions of dollars of printing by the Fed just to backfill for the default of private sector credit creation at that time. And I think we all know intuitively it's coming, but it's just not as close as most people think. Now, what my mentor, if he's listening, Jeff, I'm sure you're cringing as I'm talking about this because he thinks it's happening tomorrow. And
Literally tomorrow, he's every next day.
yes, and you know it's so interesting is in the beginning he was a gold bug, and he was somebody who really helped me understand the Austrian school in application and what went wrong with it. But so he hated Bitcoin in the beginning, just hated it, and then a few of us were able to orange pill him, and now he's he actually, this is going to sound a bit strange, but he's a deeply religious person. He thinks Bitcoin was divinely sent. And we don't know who Satoshi is because it was just one of the miracles of life. And I respect that. And I love that he thinks that because he might be right. But the point is that that's how far he's gone down the orange pill rabbit hole.
Go on.
Right?
Yeah, I love that.
100%. Right? And I don't think he sold all of his gold, but he's definitely a real assets kind of guy and understands that this is the fallback. And he's absolutely right. Bitcoin is the fallback, and a lot of folks own it for that reason, that it's insurance against the collapse of the system. But if we could step back, why am I building a bank in the middle of all of that conversation that I just laid out? Well, you can see where I'm coming out on this. I don't think the banking system is stable, but I also don't think it's going away tomorrow. So sorry, Jeff. You're probably cringing as you're listening to this. So if the traditional financial system is not going away tomorrow, then those two financial systems need to coexist. And how do we create a bridge where they don't hurt each other? And what I'm talking about here is the Bitcoin financial system and the US dollar financial system, traditional financial system with fiat currencies all included. And so the point is, how do you create a way with the very different settlement characteristics of these two systems that they don't hurt each other? And last year, they both hurt each other. And it really pained me because I was watching it, and it was pretty obvious that the banks that were servicing the crypto industry were doing too much maturity transformation. I mentioned on stage with you yesterday, Silvergate had 10 cents of demand deposits in cash as of last summer. And so when 10% of its depositors showed up, then the liquidity was gone, and then they had to go to their backup liquidity, and they had to start selling bonds at a loss. Now, to Alan Lane's credit, that bank did not actually fail. They chose to liquidate it. So he paid all his depositors back, and his shareholders are going to get something back as well. That tells you that it was better managed than Silicon Valley Bank was. But it wasn't managed for the reality of what we're living in, which is that money is just moving faster. And this new technology, even for the US dollar, is going to cause a lot faster bank runs. And the banks are just not set up for that. And I do worry about it.
Well, I've told you this before. I think I said to you on stage yesterday, I don't keep much money in my personal bank account.
Yep.
I do have to keep my tax buy. So like any savings goes into Bitcoin. Yeah, and I keep enough credit in my account for the next 3 months. So if anything disastrous should happen, we're fine. But I do have
That's your working capital.
But I do have a vault with the bank where every month when I get paid, I put my tax by. So when my tax is due, I can just pay it off.
Yeah.
That grows up to a decent sized amount.
Okay.
I can't do the same with the business. The reason I can't do the same with the business is I can't have Bitcoin volatility risk when I have to pay everyone's salaries. And we've got 7-8 people who work across the podcast and the event.
Amazing.
And things. So that account can fluctuate anything from 100,000 to 600,000 because of the cycle of when we get paid. I have far more interest in having a bank account which I pay for, which acts like a vault and stores my money.
Yeah.
And has no risk. I would pay for that service as if I had to choose between that or a bank that offered me a low interest rate. I'm not here for the interest rate. We make money making content.
Of course.
And so I don't need an interest rate. Yeah. I just want a bank where I know when my money's in, it's there.
You do need an interest rate in an inflationary environment.
Well, yes, you do. But what I'm saying is that's not my primary concern.
I get it. That's not your business.
I'm not comparing.
You're looking for operating cash flows, not financial cash flows.
I am looking for if there is another financial crisis, because a financial crisis is likely a banking crisis.
Correct. Always. Yes. And
I know our equivalent of the FDIC insures up to 80,000, 90,000. That could collapse our business. If I lost,
Of course it could.
yeah, I could maybe not. I could make payroll one month and not the next month.
Yeah.
I don't want that risk.
Right.
So this is why when you've told me about what you're doing with Custodia, I'm like, okay, well, I need that in the UK. We don't have that.
Right.
I think our banks are a little bit more responsible, and I think our central bank's a little bit more responsible. But I still don't want the risk because there would be a contagion anyway. We had
Of course there would be.
We had the contagion in 2008. The government had to take over the Bank of Scotland and Lloyds.
Yeah.
So I want a service like this, and I don't understand why more people aren't doing it.
Well, to give you some perspective, the community banks had 8 cents in cash for their demand deposits, and everybody was rushing to the large banks, the money center and GSIB banks. They had 12 cents in cash, right? It's not that different to your point, right? It's in a crisis, in a true crisis, none of them survive. But you're absolutely right. This happened to a lot of Silicon Valley tech companies. They were so focused on building their business, they forgot to do the counterparty credit risk analysis of their own bank.
Did they even know they needed to?
Well, anybody who studied economics or finance in school understands how fractional reserve banking works and should understand that it's fundamentally unstable because there's always a point at which any bank that is leveraged like that could fail. But I don't want to put my name to that, right? So here's the funny thing, right? You talked about this, the central bank in England. The Bank of England just came out with a paper last week about stablecoins, and they're requiring pound sterling stablecoin issuers to be banks that hold their reserves in central bank accounts. Now, banks are defined a little bit differently in the UK. There are true depository institutions, and then the UK also has these e-money businesses. But ultimately, it has to be a payments regulated business, and the reserves have to be held one for one at the central bank, and there's no interest going to be paid, is the recommendation from the Bank of England. Okay, it sounds great. It's exactly what you're looking for, right? You can just keep your payroll cash and your tax cash in a stable coin and not have to worry about your bank going bust. Well, the Fed called that very business model unsafe and unsound in January.
Why? Why did they say it? Is it safe and unsound because of what they've built already and they know that will collapse everything else? Or did they have a reason, even if though you can call bullshit on it, did they have a reason?
Oh, well, they had an 86-page order explaining the reasons why it was unsafe and unsound. By the way, the longest ever Fed denial prior to our denial was 3 pages. Okay, so they came at us so over the top that, and what's funny is the world figured that out, and literally within a couple of weeks, I got a call from an American banker asking if I would accept a nomination for being Innovator of the Year, and they ended up giving me that award. Thank God, and multiple awards have come my way because people understood both Custodia and the state of Wyoming got really screwed by the Fed. Okay, so we understand. Like, people understood that. I would say it's 95.5. The people who looked at what happened and said, "All right, it doth protest too much. They went so far over the top." But what were they getting at? Some would argue that the question is right, that they were so afraid of a bank that wasn't going to lend. And calling that unsafe and unsound, whereas a traditional lending bank, which we all look at and say, well, of course there's a point at which every bank that does fractional reserve banking has a risk of failure. And that's unsafe and unsound. So, they didn't say that in the 86-page order, but
what was their key points?
Everything else.
What was their key points?
Oh, it was risky. But
what's the risk?
Well, but also, okay, it was, keep in mind the time. It was digital assets coming off the failures of 2022, including and especially FTX, right? The bank regulators all came out in the U.S. on January 3rd. We got denied on January 27th, and went hardcore anti-crypto on January 23rd.
Hold on. So if there was no crypto component and you were just a full reserve bank. Hold on. There was another one years ago they blocked, didn't they?
No. Oh, multiple. They've blocked multiple. But so, yes, so this is interesting because I was alluding to this on stage yesterday. The Fed has also blocked other uninsured state chartered banks. So here's what's happening. The FDIC is not insuring certain types of banks. They really don't want any innovation whatsoever, period, it seems, in the financial system. They only want the traditional banks to do anything in banking. They don't want anybody new.
Is this because the traditional banks do their dirty business?
Well, that's a good question. I can't say that. I will say that it's very obvious that there's a huge incumbency bias. And there's more that I know that I can't say, but the gist is it will come out at some point soon, I hope. But long story short, there is a huge incumbency bias. And to get to your question, was it crypto? Okay, the Fed has also denied, and the FDIC has denied insurance to a number of payment banks that don't want to lend, and these other ones don't have any crypto component whatsoever. So what they've done is go to the 6 U.S. states. 6 of the 50 U.S. states have uninsured bank charters. 3 of them are red states, 3 of them are blue states. And 4 of those states have chartered banks that are applying for Fed master accounts. Many of those banks have applied to the FDIC, and the FDIC said no. If the FDIC insured us, and we did apply for FDIC insurance, if the FDIC had insured us, then we would have gotten in to the Fed system. But the FDIC said no. Okay, so your question is what happened to us specific to crypto? We'll go look at the fact that the FDIC and the Fed are both rejecting other non-lending payment banks as well. One of them is a company that I mentioned yesterday that was doing trade credit, basically trying to speed up payments and supply chains and using technology to do it. They essentially set up, as I understand it, an API call at customs offices so that when goods clear customs, that the invoice is automatically generated and then the payment gets started. And they were using technology to do this. This sounds like a really great idea. Let's speed up payments and supply chains. And unfortunately, they got denied. And I don't fully understand it, but the same thing, the same basic language was unsafe and unsound. So that's going in the same direction of where you are, which is they just don't want non-lending banks. But I do believe in our case, because what did the Fed say in that 86-page order? All over it was risk related to crypto.
Well, I do smirk when these people say unsafe and unsound when they've built an unsafe and unsound financial system.
Right.
Pierre put out a brilliant tweet recently. What did he say? The arrogance of telling me how to be responsible with my money when you've built up a $33 trillion debt.
Yeah.
Something along those lines.
Yeah.
It was brilliant. Well, listen, I mean, I said something to you yesterday. You even tweeted about it. About certain things feel very un-American. Like,
absolutely.
I've come to this country for years. I love it here. I love American people. I love the American values. I absolutely love how this country was found, even though you kicked us out. I loved it. I love reading about what the founding fathers did. I wonder now if they were here today rewriting the Constitution. Obviously, there was, when you're in the UK, we know 2 of the amendments. All the rest we don't really know. We know that we have a First Amendment to protect speech, Second Amendment to right to bear arms. But I actually believe right now there should be a third one that relates to money. Something that relates to protection of your rights to your money. And I don't know what it is or how it is. I'm not smart enough to construct it. I just feel like that is a missing component, which feels like something that would be very American, that you would have the right to own your own gold or your own money, whatever it is.
Yeah.
I believe you need
Okay, so I don't think that the founding fathers thought that was necessary because of Article 1, Section 10 of the U.S. Constitution, which defined the dollar as specie, gold and silver. I don't think they thought they needed an amendment specifically to that because it was already covered in the Constitution itself. However, the Supreme Court has, and I don't know offhand, Trace is an expert on the cases, Supreme Court cases related to money, but basically the Supreme Court overturned it. So there've been a lot of cases, a lot of things that have caused the Constitution to de facto be overturned in interpretations by the Supreme Court. Interstate commerce is one of them. That blew a huge hole between, essentially in the 10th Amendment, and the whole notion that the fundamental unit of government in the United States is the 50 states. It's not the federal government, right? But so that, if you look at the creeping centralization and the creeping overturning of the U.S. Constitution, it's happened over time, and it's been steady. It's not like, there've been events along the way, but it's been fairly steady. As an aside, when I was visiting Washington D.C. one of these last times, I went to both the Lincoln Monument and the Jefferson Memorial. And you can see, right, the Jefferson Memorial is from the founding time of the country, and then the Lincoln Monument is the Civil War. So there's, give or take 100 years in between. And you can see in just the statements of those U.S. presidents how Jefferson was so committed to devolving power and decentralizing power, and Lincoln was the opposite. So the U.S. had a huge sea change just in that first century of its life. And it's continued. And so it's just interesting how two presidents who are highly respected, I'd been to their monuments previously many times, but it wasn't until I had the lens of the life experience and just age of understanding that when I read the things that they were saying that were inscribed in those marble monuments to them, just how different they were. So there's a perception that the U.S. is losing it now. No, I think it's been a creeping thing that's been happening throughout the U.S.'s history, and there are things that I wish we could go back and change. But so the Supreme Court was the one who blew a hole in the Constitution by there was a Supreme Court case that essentially said no, money isn't specie, and having a fiat dollar that wasn't actually gold or silver is okay. Now, would this Supreme Court uphold that? I don't know. Maybe they would overturn it. This Supreme Court hasn't been afraid to overturn bad precedent. However, you have to get what's called standing to be able to get to the Supreme Court, and it's hard to get standing to sue over issues like that. There's a very interesting law review article talking about why bank regulators in the U.S. almost never get sued. And it's by David Zering. It's called The Corporatist Origins of Bank Regulation. And, the federal bank regulators, we know, have been operating above the law, right? Operation Choke Point was not legal, and they did it anyway. And the impetus for our case was the Federal Reserve shall provide services to all eligible depository institutions. That is a paraphrase of the statutory language of the Monetary Control Act of 1980. It's very clear, and the legislative history is very clear. The Federal Reserve must, literally the word shall, provide services to all eligible depository institutions. And even there's a non-discrimination provision in that law as well, right? I mean, it's crystal clear. If you are a chartered depository institution, you get Federal Reserve services. Well, you mentioned there were other banks who had tried to challenge the Fed's denial, and the Fed was able to block those. The first two cases, the first two attempts to deny or to challenge the denials were blocked. Ours is the third, and the third time was the charm. And I obviously can't talk about the case, but I will just say it's public knowledge that the motion to dismiss the case was denied. And it has gone forward to discovery. This is all public information, and the discovery is slated to end December 18th.
Can you tell us, is it you litigating them?
Yes, we sued them.
So you sued them, and can you tell us what it is specifically you are suing them on?
On that statutory language.
Okay.
Right? So if we step back, what has happened? There's been this creeping centralization of power in Washington, D.C., and in our industry, it's to the bank regulators who literally have no checks and balances on them because nobody ever sues them. And they're not subject to the appropriations process. This is David Zering's law review article, which is terrific. And he looked at how many times the Fed got sued in the decade 2010 to 2020 for things other than, employment cases and things like that. But it's just when a bank actually sued the Fed, and it was twice. And one of them is not relevant because it was over the constitutionality of whether the CFPB, the Consumer Financial Protection Bureau, was properly funded. So that's not a bank regulation case. There was only one. And so when an agency is almost never sued and there's no check and balance on their power, what do you think happens?
They get away with whatever they want to get away with.
Well, and this is why, actually, it turned out I didn't know this at the time, but one of my law school buddies was the lawyer who sued the FDIC on behalf of the payday lenders regarding whether Operation Choke Point was real, because the FDIC was originally denying that it was real, and according to the record, lying. Because once David got them into court and got into discovery, he started finding all kinds of evidence that they had lied. And so the FDIC settled that lawsuit and agreed to stop subtly pressuring the banks not to bank the payday lending companies. But we know Operation Choke Point in the crypto industry. Nick Carter was right to coin the phrase Operation Choke Point 2.0, because we've been in one of the industries that's been targeted by this subtle backroom pressure of the bank regulators. But because they're almost never sued, again, there's no check and balance on them. And so sometimes it's clear they look at the law and say, well, I just make it up, right? I mean, they're not challenged on their interpretations of the law as to whether they're valid or not. Operation Choke Point was not legal. And it wasn't until somebody sued them, in that case, the FDIC, that it was determined just how out of bounds the FDIC was at that time. And so that's David's point, that these federal bank regulators are way over their skis. There's a structural problem that there is no check and balance. They're not.
There's an American problem.
It is a very American problem, but it's un-American, to your point.
Yes, and this is what frustrates me so much, because America's a proud country. We know this. It's proud of its values. It's proud of its history. It's so proud of its constitution. People talk about this being unconstitutional passionately. You have 300 million very proud Americans, and then you have a group of people who literally operate in opposite to how the Founding Fathers
Correct.
did. The Founding Fathers tried to build everything to build a strong republic.
Correct.
They understood the weaknesses of man, and well, I say weaknesses of man as a term, but weaknesses of people, and they put every check and balance they could think of. They argued over it, and now we've got a bunch of, I think, corrupt, crony, career politicians who govern over a bunch of three-letter agencies who constantly make decisions to crush individuals, crush business. And I just don't understand it. I don't because look, if there's ever an attack on free speech, people defend with the First Amendment with everything they have. Same with even with the Second Amendment. Look, I hate all these shootings. I don't understand why you have guns, because we just don't have them. But I absolutely respect it.
Well, you've got the knife problem in London, right? I mean, it's just a different manifestation of the same issue.
Yes and no. Let's not get into that, because everyone listening will get wound up. But I'm just saying, I don't understand it because of a country that doesn't have it. But I respect it because it is your country, and whatever happens, it doesn't matter how many schools have shootings, people will not give up their Second Amendment. But they give up everything else. They'll fight over abortion. They'll fight over trans rights. They'll fight over climate change. But actually, they won't fight over the collective thing that's crushing them together.
Right. But see, that's the amazing thing, which is that the media and the education system culture has pushed Americans into those culture wars, literally. And it's bread and circuses. It's taking everybody's eye off the ball of the fact that mom and pop are being stolen from in the way that the financial system is set up. And I think the anger out there is incredible. One of the things I love about living in both worlds, right? I was in New York for 30 years. I lived in a very high-end neighborhood in Greenwich, Connecticut, with two of my neighbors were billionaires. Okay, but I can also go back home and strike up a conversation with, a minimum wage worker who is, working hard to put, food on the family table. In fact, actually, I want to thank somebody who, I don't know if he even knew who I was, but it was an oil field worker. We were out to dinner with friends. One of our friends was having a birthday, and this random stranger couple paid for all of our dinners. And, this was probably not somebody who had extreme wealth, but he was a generous person who saw happy people having a birthday, and he just randomly paid for all of our dinners. And nice. I'm pretty sure he was an oil field worker who had just gotten paid. And this was I will pay it forward. I'm going to do that. When I find another circumstance like that, I'm just going to pay for somebody's dinners and pay it forward.
Well, we're going to dinner later.
but this is the point, right? A lot of the New York, the billionaire set would never be in a position where somebody who just came off the oil field and just gotten paid would buy them dinner, right? Because there would just be this divide. Okay, but I live in both worlds, and so I appreciate it and pride myself in understanding both sides. So that's the background that I want to lay out when I say the anger out there over what's really going on is incredibly high.
But it's not coordinated.
I know it's not, and they've been taking advantage of that.
Yes,
Yeah.
and I think if you got just a random selection of Democrat voters, a random selection of Republican voters, said, list these 5 issues in order that are most important to you and your family: abortion, gun rights, climate change, inflation, or money, whatever. I think most would put the money near the top.
Oh, of
If you
course.
really explain it.
They're going to put their family,
Yeah.
household table, finances issues.
So you sit them together and go,
Yeah.
all right, what do you want to do? Do you want to argue over these 3,
Yeah.
or do you want to join forces on this?
Yeah.
And you have to get a uniting force. This is why I find Vivek so interesting, and I find RFK so interesting, because especially Vivek, he particularly impressed me yesterday in that he recognizes the size of the federal government. He said, I'm going to reduce it by 75%. We're going to cut this.
That's going to be a hell of a fight for him, right?
course.
If he ever were to get into office, right? But
Yeah, I don't know if they'll do it, but the fact that he wants to do that, he cares about that. He understands the value of Bitcoin. He understands what's going wrong with the Fed. Like, he understands that primary issue that affects both parties.
Right.
And he refuses to get involved in all the other nonsense.
I know.
And RFK is similar. He's going independent. Like, America's pushing towards needing this unifying force. It's not going to be Biden or Trump. They're not going to unify the country.
of course not.
Andrew Yang would have been a good one as well.
What's interesting is how many people I've heard at this conference say, why can't Vivek and RFK join
together?
forces?
I know.
Right?
They could win, right?
I actually think they could. I mean, certainly RFK, he's polling at 22% in a 3-way race right now.
That's unbelievable.
It is, right? But that tells you so. And I tweeted out yesterday, I was standing backstage when his motorcade arrived. They actually drove into the convention center. And I don't know if you're aware, because you're not in the US and getting the daily news, but there was an idiot who tried to break into his house, was released on bail, and went back and tried to break into his house that afternoon. So twice the same day, right? He's got real security issues, and Biden won't give him Secret Service protection.
Yes.
And I am really just appalled. And you just look, you see the metal detectors that we all had to walk through, right? Mm-hmm. That's all privately paid. And I look at that and I say, that is a competitor to the sitting president, and it's never been, no sitting president has ever withheld from a competitor that was a legitimate candidate Secret Service protection. It's never happened until now, okay? So there's so much that's gone wrong that's even worse that's happening in the Biden administration right now. And, the sad thing is Biden himself did not govern as a hard left person when he was in the U.S. Senate, but he's governing hard left now.
Yeah, I find that whole, especially the history of both his father and his uncle,
Yeah.
His family's been targeted.
For sure.
Why they wouldn't give him additional protection is ridiculous.
Because how many millions, I was talking last night with folks at our dinner, we were trying to estimate, like back of the envelope, how many millions of dollars is he having to spend on personal security? And he has to raise the money to do that. The Kennedy family is wealthy, but not that wealthy. And it's all, he's obviously next generation, and it's been spread around a number of people. But my point is, I don't think he's independently wealthy.
Well, even if you are, as well as I do, wealth doesn't just sit in a bank account.
Well,
when
of
you
course.
have it, you spread it out in investments. So actually liquidating wealth is hard.
He's got to spend, we were guessing at least $10 million on his personal security. Okay, so he's got to raise that money from campaign donations if he's not funding it himself. And my guess is that his wife is a successful actress. I don't know what their personal finances look like, but he's not a billionaire. Okay. So spending at least $10 million on personal security is something that he has to fund. And so if you think about it from the perspective of campaign finance, by forcing him to fund that personal security out of his own campaign funds, he's got less money to spend on commercials and, campaign staff, right? That's what Biden's doing. That, to me, violates campaign finance law.
It's almost like another choke point.
Yeah, of course, but that's the point, right? It's this centralization of power in Washington D.C., and he's fighting against that. And he actually said he thinks the CIA was involved in his father and uncle's murders. And Vivek, I have no idea whether he's gotten some of the same personal security issues by saying he's going to fire 75% of the U.S. government. But those two are taking on some very powerful interests, and all this centralization of power in Washington, D.C., which was not the original Constitution. And a lot of folks, to your point, don't understand just how much the regulations have been captured by private interests. This is why the big banks keep getting bigger, and they won't let new ones in. Or the small banks, are obviously, they got bullwhip affected and probably won't survive, right? So we're going to just see a consolidation of the small banks going away and the big banks continuing to get bigger. I mean, my God, they let an exception for J.P. Morgan to purchase more than to purchase the First Republic stub and Silicon Valley, some of the Silicon Valley Bank assets. That they gave them an exception from the law that says that you can't have more than 10% of the deposit base in the United States. Well, if you're just going to waive an exception like that, then J.P. Morgan's got an interest in creating an environment where more and more banks fail, and they can just go pick off the best parts of the businesses because they're just going to get that exception waived. Okay,
well,
this is the stuff that's happening in the United States that makes people so angry.
There's no wonder that Jamie Dimon doesn't like Bitcoin.
Well, he says he doesn't like it, right? But they've built, just like the other big banks, they've built Bitcoin custody and they're ready to go. They're probably mad as hell at the SEC, because Coinbase has locked up the ETF custody business. The only non-Coinbase custodian in all the ETF custody filings, all the Bitcoin spot ETF filings, the only non-Coinbase custodian is Fidelity for the Fidelity Fund. Everybody else is using Coinbase. And I'm quite sure Bank of New York Mellon and State Street and JP Morgan, who are the biggest securities custodians, are mad as hell.
Of course.
Yeah.
I mean, I think it's a reluctance to get involved. I don't think they want to be involved. I think Jamie Dimon wishes this would all go away.
Well, certainly the intelligentsia in the bank industry wishes this would all go away. Yeah. And we've been the target of a lot of misinformation from the banking industry and a campaign to that some of which has been public, some of which has not, to get the Fed to block us.
Just fight them. Just keep fighting them.
Well, we are fighting them. And, that's one of the great things in the wisdom of the founding fathers of the United States is that they created 3 equal branches of government. And so what we're talking about with the consolidation of power in Washington, D.C. is the executive branch, right? That they've taken power away from the states. They've taken power away from individuals and put it in Washington, D.C. And you can see it, by the way. I was an intern in the White House in 1992. And I remember what Washington, D.C. looked like back then compared to what it looks like now. The giant sucking sound of money that has come into that area of the United States and the huge upgrade of real estate and the massive increase in the cost of living. How did that happen? It was because of all the centralization of power in Washington, D.C. And now Washington, D.C. is this super high-end city and, incredibly expensive to live in. It didn't used to be that way. When I was working in 1992, I mean, there were a lot of rundown buildings and there hadn't been this huge real estate upgrade. And now it's, huge portions of what used to be poorer neighborhoods are now gentrified and fashionable and super expensive, right? And all the people who lived there got pushed out by that. That wasn't good for them. That was not good for them. But yeah, so I lament, I don't like spending time in Washington, D.C. because I know that a lot of the wealth that you see visibly when you walk around the place came from the centralization of power and just this skimming of wealth from the middle class.
Well, I don't understand how all these politicians got so rich either.
Well, Elizabeth Warren is, according
73 million?
90.
90 now.
Right? And she was a Harvard law professor because she wasn't hurting. I don't know what her husband does, but $90 million.
Where from? Where'd you get it?
From? Yeah.
Nancy, where'd you get your money from?
Well, her husband was a real estate developer, so at least it's a little bit more explainable.
And a good trader.
Yeah. I mean, when Congress exempts itself from insider trading laws, you know that there's something wrong.
What?
I know.
It's like, come on.
I know. Again, there's so much of the U.S. that has moved away from the original Constitution. But I didn't finish the thought about the judicial branch. One of the great things about the judicial branch is it is the great equalizer. So, I mean, unfortunately, it's expensive to litigate because there's so many rules in the judicial branch, right? And so we've seen some litigation in this case, but in this industry that has pushed back against the overreach of regulation that came from the executive branch. So when there's overreach in the executive branch and concentration of power in Washington, D.C., you have two ways to deal with it. One is get the law changed in Congress. Well, for reasons we just talked about, Congress is a uniparty and wants to centralize power and more money to themselves. They get rich by going into public service. It didn't used to be that way. And the other is the judicial branch. And the judicial branch, Nick Carter has said it, and it's right. It's the last bastion of freedom in the United States. It's the last great equalizer. And I just got done reading John Deaton's book. It's a phenomenal book. It's called Food Stamp Warrior. You know, he's the lawyer who gathered 75,000 XRP holders to agree to be sued by the U.S. government. They intervened in the XRP case against the SEC to be 75,000 people from around the world agreed to become defendants against the U.S. government in that case. It's an incredible story, and I don't agree with John that he moved on from Bitcoin pretty fast because of the scaling issues. I don't agree with him there, but he's a phenomenally smart guy, and that book was a stunning book. And he grew up in the hood. He was one of three white people in his high school. And just what his experience of going from, he was a food stamp warrior, grew up in a very poor family, knew real hunger, and lifted himself up by bootstraps on boots he never even had. And it's just an incredible rags to riches story. But he is a fighter, and he is a perfect example of somebody who used his platform for good and pulled together 75,000 people to intervene in what he calls one of the strangest writs of mandamus ever filed in the U.S. court system. And he succeeded. And it's a phenomenal story. I highly recommend the book. It was such a page turner. It's a crypto adjacent book because he's obviously a well-known person in this space. And I don't want to get into the Bitcoin versus XRP thing, but
don't have to.
But I will say that he did an incredible service to all of us, and his point is well taken. He said, and I didn't know back then because I wasn't following it. He said this is going to impact the entire crypto industry. This XRP lawsuit, and he turned out to be right. And so by fighting and by being a brass knuckle and literally brass knuckle, he's going to, if you read his book, you'll hear about his brass knuckle stories. He's a true fighter and, became a U.S. Marine and then a prosecutor and ended up, he said like he was so successful in his law practice that he started to get bored by it. And then crypto became the thing that caused him to get out of bed in the morning. And he's not been making money off his crypto lawsuits. He did all of that because he was an XRP owner. And he said, look, what the SEC did was steal from people. That's his perspective. By calling XRP a security and having all the exchanges delist it, that was what he concluded. And he wanted to stand up and fight. And thank God he did. Thank God we have people like that in our industry.
Amazing. Well, listen, I think we actually have got to get back to the conference. All
right. Yeah, I have to as well.
Is there anything you want to tell people about?
Way long.
Yeah, we could have gone on for.
I know we could. I love doing it.
I love
podcasts
it
with you.
Yeah, me too. I love just hearing you explain the history and the legal side, and also I just want you to go when you're fired. What do you want to tell anyone about Custodia before we finish up?
We are live. The Fed did not kill us.
Go on.
And we have a phenomenal team that custom built a Bitcoin custody platform. And it is, I think, the best custody architecture out there. It's true segregation. We don't funnel people into an omnibus wallet, and we give the best customer protections from a legal and regulatory perspective by being a bank in the state of Wyoming. So check us out. To be clear, our U.S. dollar deposits are not FDIC insured. And that's a feature, not a bug in my mind, but I have to give that disclaimer. And because we're a non-lending bank, not FDIC insured, and we're not licensed in every state. We're serving businesses only. So check out our website, but please get in touch with us. I would close by asking this industry to support us. A lot of people ask us, how can we support you in your fight? Just do business with us. If you have an account, or if you have money that you want to put into a bank account, we offer a government money market fund. It's not even a bank deposit, it's a government money market fund, but it's connected to a bank account. So, just US dollar cash, bring it on, and Bitcoin custody, bring it on. We're spending a lot of time down here talking to miners about how we can help serve the mining industry. And again, I will say, just be careful. I don't want to overstate. Some states we're not even licensed to do business in at all, like New York. It's going to take us another several months before we get into all 50 states. But please do business with us if you are a business that is a lawful business in this industry. We are committed to serving this industry, and we are not going to debank it like so many banks have done.
Brilliant. Well, look, we wish you all the best with Custodia and your lawsuit. You have a permanent open invite to come on the show whenever you want.
Thank you.
Just let us know if we can ever help you. Just get in touch with me and Danny. All the best, Caitlin. Thank you.
I love it. Thank you. So great to see you guys in person. We haven't been in person for a couple of years. Really great to connect.
It wasn't Wyoming the last time, was it? With Tyler.
The last time we did it in person, right? You made an exception for one of our last ones where we did a remote.
So it was you, me, Trace, and Tyler. Well,
that was amazing.
We need to take Danny to Wyoming.
Yeah, I've not been yet.
Come on, and
we need to do it.
We'll get you out on a shooting range.
Yeah. I would love that.
All right, all the best, Caitlin.
All right, thanks much.
Thank you.